The broadcast is now starting. All attendees are in listen-only mode.
Hello, Warriors. How's everyone doing today? Okay, I want to start off with a look that I received on Twitter from a face member. Rudy Marin's been hanging out and following me around. Can't get rid of the guy, but this is a weekly Aussie yen. And of course, he says, you know, before the BOJ, so high risk. But just take a look at this area in Aussie yen. A lot of supply above it. See this line? Give me a Y if you see the supply line here. So be alert for triggers. Maybe wait till after the BOJ. And perhaps we're going to finally get some type of pullback in Aussie yen. Give me a Y if you're with me and you get it. You don't have to agree with it. I've seen Rudy trade. His looks are very good. Okay. So I want to touch on a few different pairs before I pass it over to Blake. Yesterday was focused on the euro pound, showed the blog that the team put together. We were trading about 61.8. It almost got to 78.6. So even if you did a little at 61.8, it's 70. And then maybe you put one on, another one on near 78.6. Either way, at one point you had about 30, 40 pips. You still have about 30, 40 pips. I would trail any stops above this high now. I wouldn't want to hold it above 78.6 now. Said this was the chicken way of top picking the euro, lower beta. It also is an agreement for Blake's look for a bounce in the dollar. If there's a bounce in the dollar, you would think that there'd be more weakness in euro than pound. Everyone give me a Y if you're with me. Underneath this low, underneath this 50 moving average, we should accelerate, but looking at the possibility that I wouldn't rule out one more pop to the 61.8 level, but now I would manage risk above this high. Give me a Y if you're with me. Hi, Craig, Ben, Anthony, Conrad. Okay. Just want to touch on some of the yen crosses. Yesterday, we talked about, and in fact, Steve talked about us not being able to get up to 130 when I thought we might rally to 130. Yesterday, it looked like it was terminal action up here. We're breaking this uptrend. Euro yen looks very ugly. I'm sure Steve Volge is still short guppy down here. I said I don't think we could do much better than 640, and we did fail from about the 630 level. This looks destined for lower levels. And I just want to show the pound and why I think there's some hope for EG. People that have followed me for a long time, why does the pound look incomplete to me? Just a quick pop quiz. Why does this pattern look incomplete? I know you guys get it. What's missing? Let's see if I can. Windsor should know. Hardianto knows. Okay, Hardianto's right that perhaps we get one more drive up in pound dollar, something like this. 31.35 or so. So that could happen. And the other daily that says that the euro could correct is its cousin, its sister, US dollar Swiss. Where are we? Okay. I'd look for another low here in US dollar Swiss, but the daily, someone else on Twitter sent it to me, and the daily is starting to take the look of a 3-drive formation. It's done nothing right yet. You need a green candle on the daily, but the one thing it is doing right is we're making new lows on the daily with the RSI at 35, but it needs a little bit more short-term work here. Here's the 3-drive line right here. I want to see it. So that augurs as well for the potential of dollar bounce. Everyone see that? Yeah, Diane. Okay. Hi, Diego. How are you? Okay, so Blake, how are you this morning?
Morning, Dale.
How are you, partner?
I'm doing all right. How are you? I know you were up late last night.
Oh, yes. Should I tell the community?
No, I mean, if you want to. I'm just saying that I know you didn't sleep well last night, so.
Yeah, well, you know, guys, I pulled an all-nighter. I was studying all night for my urine test today.
How did you perform?
It's a joke. But anyway, I'm wondering what you're thinking, if maybe we're getting a little closer with the action that we got, a little pullback in euro. The euro actually, Blake, is still above the return line. See this wedge? We have had a throw.
Oh, yeah.
So, I mean, there's still no reason yet, technically, to top pick it. But once we got back within the wedge, there might be a reason. But we could rally from here.
Yeah, you know, well, first of all, I started picking up some euro short yesterday, and just so you guys know, I don't think this is the right time to be aggressive. This is just more of a, oh, you know, hey, maybe I can make 20, 30 pips, you know, on a euro pullback ahead of the ECB, because tomorrow the risk is, and I'll grab the charts here, and
Hey,
Steve,
bro.
I can grab the chart, right?
Yeah.
Absolutely.
You just can't pass it to.
Yeah, just please don't
can't
pass it because
can't
you are
pass it
using
to
my
a
name twice.
twin.
Good morning, by the way,
Oh,
to
yeah.
everybody.
Good morning.
Does that mean you're going to talk twice as long?
No, three
Steve?
times as long. I ask people 3 times a talk.
So just so everybody knows what I was thinking here, and the we hit 127% extension of the election night highs to the inauguration lows in the euro, and so, you know, relative strength is divergent. The dollar's just been beat up. I thought there might be a little bit of a dollar bounce, but I'm not playing it like, oh, I'm going to sell the euro here and I'm buying it at, you know, I'm buying it at 108. You know, I don't know. I'll be lucky if I'm in this thing, you know, after today. And the reason why I'm just doing it just from a technical, like a little stretched situation, but I won't stick around long, and I don't want to risk much. And I got a good price, you know, being short up here in the 60s. So from yesterday, and if you use ForexAnalytix, I mean, you got the analysis yesterday. There's just not, there's no like, and you can see right here, you know, when we hit the 127% extension on the 4-hour, you know, right there, the analysis yesterday is the euro dollar hit the 127% extension from the peak of the election night to the trend lows on our inauguration night, caution longs. You know, for me, you know, I took that as a cue as, okay, I'm going to short a little bit, but it's not like I said. I want to reiterate. It's not like I'm looking to. I'm not looking at it going, oh, it's going to 107 here. It's more of a, you know, just kind of scalp it, you know. And here's the other thing is, you know, the ECB has, and Mario Draghi just last week mentioned the fact that you know, he's got something big to announce as far as monetary policy goes, but that's going to be at the Jackson Hole convention, or Jackson Hole. What's the proper term for it? I almost said Lyceum, but that's not it. It's a
Pool party.
yeah, pool party in Montana.
Is it the symposium, right?
Symposium. Thank you. That was the term I was looking for. Is a Greek word, right? Tell me
Blake, the Illuminati are meeting up there. You mean?
They are the Illuminati, but the symposium. Thank you, Stelios. Yeah, Stelios is also a very talented writer, and he's got a vast vocabulary. even in English, being in a second language. I know, it's amazing. But
you asked where it comes from. It comes from sin.
Oh God, here we go.
Sin is plus, it means addition, and pinin, which means drinking. So it's like a place that people get together and drink. That's where symposium comes from.
I just relived the big fat Greek wedding first movie just now. It is amazing. Thanks, Steve. But the knowing that he's going to say something at the symposium, does that mean that tomorrow he's going to allude to the fact that they're going to start tapering? I mean, that's what the euro's been rallying on. So if he just outright talks about tapering, the euro could rally significantly from where we're at. I mean, we could continue to break higher. The other food for thought is if there's nothing said about monetary policy or everything is status quo, the euro could really have a massive pullback. I mean, we could really see like 113 to 112, but we're not in a position right now.
Blake, sorry to interrupt, but are you sure about? You
always interrupt when I'm in the middle of my train of thought. So go ahead, Steve.
Are you sure about that last one? I mean, I'm not saying that I'm of the opposite position, but I'm actually a little bit torn of what's going to happen if Draghi does not do something much. I mean, the internal question I have in my mind is the following. Does the fact that the market is expecting a more hawkish Fed and Draghi not being dovish to try to fight that is going to be interpreted as a dovish or a hawkish message? That's what I'm uncertain about.
I forgot. What was I talking about?
You were talking about if you said at that point that if Draghi doesn't mention anything, that perhaps that's going to be damaging for the euro. And what I said is that I'm not so sure about it, and meaning that I don't disagree with you. I'm literally not sure about it. If the market is going to interpret, him refraining from talking about it as a hawkish or a dovish message.
They're expecting something, and that's the thing is that all this buying, especially in the last couple of weeks, have been in anticipation of. And so if he doesn't deliver tomorrow, even hint of that's the direction that they're going, I think that there can be a pullback. Do I think we're going to 109? No, but do I think we could come back to 113? Sure, but still,
don't you think that he's getting phone calls from BMW and Mercedes and Siemens after a 10% rally in the euro that perhaps they need a trade advantage that's disappearing?
I don't know. I don't think he's getting those types of phone calls, but I think that it probably does raise some concerns. Now Germany has been a long time advocate of having tighter monetary policy, but but as the pinch comes, I'm not too sure how welcoming they are after such an aggressive move, especially since you think about the last 6 months. I mean, we were trading at 104, now we're at 115. That's a almost 10% increase in the value of the euro dollar just over the course of the last 6 months. It's huge, and from an exporter standpoint, that's really huge. So, and what we're not seeing here is price stability. So what you're doing is you're fanning the flames to the idea that Donald Trump wants to push the agenda of having a weaker dollar, and then you have the ECB possibly tapering. I mean, you got a double whammy there, and that's what's really accelerated the euro higher, which in all fairness, we have been very bearish the dollar for the last since the beginning of the year because of this idea that other central banks are going to have to tighten their policy as well. But it's happened at a pretty rapid rate to where it could have a bit of an effect on some of the exporters, as European exporters. Now, does he get phone calls? I doubt that, but but who knows? I mean, I don't know. I'm not a central banker either. But one of the other things, and you pointed this out, you were talking about the yen pairs, and by the way, Dale, great call on the euro pound yesterday. Kudos to you, very very nice. If you're looking at the euro yen, this analysis in ForexAnalytix just went out just a few minutes ago before it broke down. That the euro yen had a euro yen testing the 129 level, which could also be a complex head and shoulders pattern. As it comes out of the ascending wedge, a break of 128.50 would be quite bearish for the pair. And then there it is, and literally less than 5 minutes later, we pushed right. We were trading right here, and then we just
great alert.
That's the
advantage of those push alerts, man.
Yeah, those notifications are there, and a lot of people, they focus on the patterns in play, and they go, oh, but you didn't put in a pattern in play. Look, patterns in play are, we look for a lot of different things, not just what you see technically, but we try to alert you, as things are happening, in some cases like this case, before they happen. So you got that alert, you're like, oh, I'm long the euro yen, and oh my gosh, I see that setup he's talking about. I'm going to tighten my stops, to 129, and then you get stopped out, saves you 30 pips.
Or get short if you were flat.
Or you could have got short. That's right. So one of the other things I wanted to bring to your attention today is let me give me a second here. Let me pull this up. This is the DSI, and I'm just going to point out a couple of things here. This is from last night. The volatility index is at 9, which is a very low reading, which I know we've got the NASDAQ that traded at an all-time high yesterday, intraday. It might even be a closing high as well. But you got volatility that's at very dangerously low levels, where that means it could spike up at any time.
Remember what 50 said, Blake? He said everyone's asking him how to short volatility, which
yeah, I mean those are all issues. You see the Canadian dollar, the Australian dollar, even the Kiwi dollar is above 80. Peso's at 86. Dollar index is at 8. These are, and by the way, this is one of the reasons why, and dollar index yesterday was at 13. This is one of the reasons why I started buying dollars yesterday as well. Is I knew that we are at very abnormally, low levels in the dollar index, and so ahead of the ECB, I figured there'd be some sort of bounce. So with that being said, you got to be really cautious. And you were talking about the Aussie yen, or at least one of the viewers were. Listen, I'm not in the camp of shorting the Aussie dollar right now. It's extremely bullish. We've broken the 77. As soon as we broke that 70 or 87 level. Oh, that's the Aussie yen. I'm sorry. Let me go back to the Aussie dollar. I don't know why I'm pulling up the Aussie yen. Oh, because we were just talking about it. As soon as we broke the 77 cent level, that was your cue. I mean, it was very, very bullish. Now, would I be a buyer here? No. Could you fade it? Possibly. I mean, you saw the DSI just moments ago. It is registering a very high level. Could you short the Aussie yen up here? You could. I don't know how comfortable, personally, I would feel if I was to trade something like this. It's kind of like the euro dollar, being short the euro. I'm definitely not comfortable right now. Doesn't mean I'm not doing it. I am short the euro dollar. But as long as we are above this 88 yen level, you have to be very careful, because we are breaking out. Now, if the Aussie yen broke back below 88, or you happen to be in the trade, that would allow me to breathe easier. If that was the case, I just I think you have to be pretty careful here as we're breaking out. I don't see any reason to short it other than being pretty overbought, but that doesn't mean it won't go down, and it might be a really, really prime short with the yen being a little stronger and with the Aussie levels so high. You know what I mean? The DSI. So
you could wait for it to be back under that blue line to have some kind of confirmation that it may be peaking. Let it do something wrong, right, Steve? Right, Blake?
Say again, Dale. I'm here.
yeah.
Let it do something wrong. And, you know, the mistake I've made a lot in my career is trying to get the edge by anticipating an event that hasn't happened before, hasn't happened yet. So, you know, it pays to wait for the market to give you a negative signal if you're top picking. And to me, the first indication would be back under that blue line breakout.
Definitely, yes.
Yeah, so you know, I think you just have to be, you know, at this stage, you just have to be really, really careful. And it's the crazy thing is it's summer, and you know, there's not a lot of liquidity. There's definitely going to be a lot of you know, there's some volatility, but it's very thin. FX market's been pretty quiet overnight, but you know, maybe we might see some more action here in these yen pairs. Perhaps I'd like to see what the equity markets have for the open today, because again, we are, you know, we're at all-time highs here. We did put in a hanging man for the S&P. We did put in also a hanging man for, well, actually the Nasdaq looked a little stronger. Also, one other thing, you know, talking about the dollar, I'm going to take you over to gold. Where is it? Where is it? Oh, there it is. I'm going to take you over to gold too. Gold, we are near completion of the inverted head and shoulder pattern. You know, the gold looks like we might press higher just a little bit, you know, maybe another 3 or 4 points. Which may spur a little bit more dollar weakness, and one of the things that's helping gold out is the dollar yen being so weak. You know, the yen is strengthening alongside gold. But and that brings up another thing. You've got gold that's almost completing an inverted head and shoulder pattern right here, right? You can see it right there, and then also the dollar yen. You may not see it here, but you have to go back over to the daily chart and look at where we're probing that 200-day moving average. So where we close at today for the dollar yen is going to be pretty important. You know, if we close below this 200-day moving average, that's probably going to be not good for the dollar yen. Could end up being, you know, good for the yen against other pairs too, like, you know, the Aussie yen or pound yen or whatever you're doing out there. Or euro yen. But at the same time, if the dollar yen bounces back again like we did yesterday, you know, that could also suggest that the gold market might come down a little bit and whatnot. So it's choppy out there. Again, the ECB is tomorrow. It's not I don't think it's not a time to be super aggressive. I did see something really interesting. And I want to talk about this really quick. Let me see if I could go. I have to go. Give me a second, really fast here. Let me pull it up. You know, we live. We've always. Let me go to my. Hold on, really quick. Steve, you said something kind of interesting yesterday. You said something interesting yesterday about our, you know, like, oh, I'd be more interested in selling, I forget what you were talking about, stocks or the dollar. Oh, you know, dollar's on fire. You want to see some publication say that the dollar was like, you know, something like that, right?
Like something that says that the dollar is a piece of garbage now, you know what I mean? The usual exaggerations.
Right. So we live in a social media world, if you will, right? And especially, you know, Donald Trump, our President Trump, has made it even more so. in today's world. Yesterday, he tweeted something really interesting. He retweeted Fox News U.S. markets since the election. Dow's up 18%, Nasdaq's down 21. He's like it's interesting. He's kind of like he doesn't talk about the dollar anymore, but he's talking about the stock market. And when he talked about the dollar, he goes, oh, the dollar is stronger probably because, the American public has confidence in me. That's what he had said. The dollar's been going, obviously it's been moving lower. When he pushes an agenda like this, like, maybe, stocks are up since the election, 18, 20, do we take that as a cue? Is this a signal of a top? I don't know if it is, but we live in a different world now. It's not the same. We're not looking at.
It's not going to be Time Magazine.
It's not Time Magazine covers anymore. It's not print articles in the New York Times or The Economist, but maybe it's social media. I don't know.
Anyway, if those arrows go green, it'll be the Democrats or the Fed's fault.
You mean if they turn red?
Red, I mean, yeah.
Yeah, right. But that doesn't matter. I don't really care about that so much. I care more about,
Trump should be really worried about that actually, because if he was smart enough, he wouldn't be tweeting that, because it's a given fact that the vast majority of the rally we've had since the elections is based on the idea that he's going to push a pro-growth agenda, and so far he has seemed completely incapable of pushing any kind of legislation that matters. So that should start worrying him, because unless he actually manages to do so, at some point these markets are going to unravel in the idea that he's not producing.
Yeah, it could be a dangerous game, right? It's one of those like if you're a trader and you're like, it's the I think I did listen to the 50 Pips interview yesterday, but he says it very succinctly, because I'm at fault, not at fault, but I'm guilty, I guess, at fault of doing this in the past, and I've done it. I try to catch myself ahead of time. I don't like to talk about my gains too much, because the moment I do, it's usually when the market corrects me. And I've always said this in my daily webinars in years past, that I'd say, when you think that's when the market will bend you over its knee and slap you in the ass a little bit and show you who's boss. And that's, it's kind of like a trader's mindset. I'm look at me, I'm on top of the world, I'm making money every day, and then that's when the market comes in and really shows you who's boss. And that's why I do believe, Steve, it is a little scary when he starts boasting about the gains in the stock market. Does that mean we top today? No, probably not. But are we getting close? I don't know. I don't know. We'll soon find out. But anyway,
even statistically speaking, Trump should be smarter, because even if he goes through the 4 years of presidency he has ahead of him, statistically speaking, being on 8 years of this business cycle, it's absolutely certain that he's going to get a recession in his hands, and then the markets are going to unravel. So if you're trying to push as an agenda that the performance of the stock market, is a manifestation of how you're doing, then when he gets even a normal recession, I'm not talking about an implosion, which might actually happen, then what are you going to be talking about? You know what I mean?
Right. It doesn't make a lot of sense to me, but not a lot does nowadays. Hey, I gotta get going for the open. Steve, you want to take the screen?
Yeah, sure, Blake. Have a nice trading day. Bye, mate.
All right, Dale, and I hope you get some rest today.
Oh, thanks, Blake. Thank you, buddy.
And bye, Stelios.
Bye, Blake. Bye. Bye.
Bye.
Okay. Can you see my screen?
Not yet. Now.
Okay, perfect. Perfect. So let's first of all let's go through some of the things people have already mentioned. The first one is the Bund, actually. And Luca was showing me some divergence between the price and the yield, and that says it's troubling for him. Yes, and it might as well be, but we need to give it more time. What I see for the Bund for the time being is nothing more than a corrective recovery. So even when we got this morning star formation, because if you see on the daily, this is like a morning star formation, not exactly because this was a too long candle, but it was an equivalent kind of thing. So this kind of candle in combination with the pin bar we had the previous day, hinted that okay, some type of a relief rally might be coming. I immediately wrote that, there are two levels I'm looking at. One of them is a retest of the broken ascending trend line, which actually did reject us the first time. And then, we had two alternatives. It's either getting an ABC, so another push higher, or dropping directly from there, which could have been the case. It's not. I think that as long as this zone holds, which is a little bit below 163, we also have just below the 50 DMA, the 200 DMA. There is nothing to tell us that this is not simply a relief rally. So having to do with Bunds, I maintain a bearish bias, and I think that anywhere between 162 to 163 is probably also a very good shorting opportunity because the risk reward is great for a continuation lower towards this zone, which is the 159.70 roughly call it zone, and then towards this triangle in a sense it is. It's not a channel, these lines are not parallel. So this trend line support, okay, towards 158. So I'm not seeing something that tells me that I should be changing my bias with the Bunds. I maintain a bearish bias, and I think they're more likely to roll over any given day now because they've already this correction has already matured a little bit. Even if we project an ABC here, where are you? Here you are. It's going to give us a target of. Oh, look at this. It's perfect actually. It gives us a target of 162.67, which is exactly in the middle of the zone. So, as I said, anywhere between 162, 163, I think it's a great zone to be looking for a reversal and a continuation lower. So, that's what I think about the Bunds. That's what I see with the Bunds. And unless we see something, spectacular, I maintain this bias. At the same time, since we're talking about the bonds, as we see, we already have a recovery in treasuries as well. We've already retraced 50% of this drop. This might end up being, corrective as well, although we have not breached the previous low here. So in a sense, somebody could say that this is, this could end up being, another higher low. And it could. There is no question about it. Reading.
Or we could put in a right shoulder around 127, but
You're
I
absolutely
never
right
felt
and
like
reverse. Yes.
yeah.
You're absolutely right.
Or we could take out that high and complete bigger fib retracement. I always thought, a lot of things have gotten back. A lot of things have gotten back, Steve, to where they were November 9th. And for the bonds to get there, that would take it back to about 28, 29. So they didn't retrace like the euro has, like so many instruments have retraced all of the election gains, etc. So that still is a possibility.
That still is a possibility, and we have to admit that the price action has been very choppy. The fact that it is extremely overlapping and choppy, what does that bring in mind? I've ended up talking almost daily about it. This USD CAD. Look at this.
Yeah.
The reason I'm showing it is it might end up, the treasuries might end up taking a bigger period of time to actually break out than people initially thought. I mean, people initially thought here that this was it and we're going lower. Then they said the same when we started rolling over from here. Then we said it from here, and that was a good short. I mean, we said that as well here because it was an ascending wedge. So even if you took that kind of an opportunity, you still managed to make some some good profit here. But not having put a lower low, you cannot be adamantly sure that, yeah, that's it. So, I wouldn't be involved with them. They are too choppy at the moment, and the vast majority of moves they produce are slow. I'm definitely paying attention to them because they're correlated with a lot of things, and obviously that's relevant. The fact that you've seen this move that you see here is, absolutely not coincidental with the recovery you see in the metals. Okay, so that's something to take into account. So
and the weakness in the yen.
Yes. So if you really believe that we're about to roll over, which we might do so, I mean, for me the critical level here is this zone, which is a little bit above 126.5. So I want to see what they're going to do from there. If they actually roll over from there and show some weakness, I'm going to tend to believe that we have at least one more leg lower, if not a continuation, to break the new lows. So for me, the bearish game is not done and over yet, but we're getting close to a zone, 126.50 to 126.80 roughly. That if we don't see some weakness from there, then the bears will have to wait once again for I don't know how long. So oppositely from the Bund, things are much more complicated with the treasuries. Okay. And this kind of a divergence is also what has led to the big rally you've seen in the Euro USD, because it's all about yield differentials. Okay. So I think now we covered the bonds, and since we did so, because I know a question will be coming about what happens with the USD yen. What happens with the USD yen is that we maintain what we've said. We're now in the bottom of the zone. We were looking for a reaction. So, this is the do or die level for me. If we get a reaction from somewhere here, good, that's fine. That keeps the USD yen in a bullish mode. If not, and we keep showing some weakness, that's going to be a bad omen, because in essence, that can be interpreted then easily as a double top here, which means that we might have a more complex correction and another leg lower, and perhaps another break below 108.80, which was here, or even the 108.15 that we had here. Okay, so I'm monitoring closely. Today's level is going to be very, very critical to what happens with the USD yen and the yen pairs. And I'm saying that because I see a lot of people are asking, again about the yen pairs. Obviously, a lot of you are involved or are looking to be involved. What I can tell you about them is that euro yen is playing out perfectly. We were expecting either a drop down immediately after those two consolidative days, or at the most, like a weak recovery, and that's what we got. And the same thing applies to the pound yen. The question is what happens from here. To begin with, we have no signs that this is not just simply an ABC, okay? Which means that if that's the case, you should not expect a much lower move than here, and that will also coincide with what happens with the USD yen, obviously, because if the USD yen finds indeed support at the current zone, that can lead to the end of to a shallow end of the recovery of the corrections of the yen pairs, or the recoveries, depends on where the yen is as a component. So, for example, if we simply do an extension here in the euro yen and see where we would look for targets, we would see 127.50 being a target. So that's not a deep correction, but that's all we might get. Initially, I was actually looking for 128. We might get another 50 pips. On the other hand, if you see some kind of acceleration here, this completely changes the count of what we have in hand. So this completely changes the outlook. But if you see a slow drip from here, then you should minimize your expectations, and instead of looking to go short late in the party, you should probably look for reversals to go long again. Okay, so my bottom line, my summation is that I'm still not convinced this is a real reversal for the yen pairs. I'm still treating it as corrections, as those moves as corrective. And unless I see evidence of the opposite, that's how I'm gonna, I'm gonna keep seeing it.
I'd like to give a shout out to Leandro at Lean FX, a Top Gun trader in his own right, and Alexandros and all the loyal people that follow me around. Glad to see your handles here in face. Thank you. Go ahead.
Okay, now pound yen.
Can't help myself.
Pound yen, the same situation. I mean, we might be putting just an ABC correction, in which case we might not even penetrate below 145. Okay, so I'm still short, as you said, Dale. Of course, I'm still short. I mean, why wouldn't I? But I have to tell you the truth that first of all, I'm thinking of either taking partial profits here and leaving my stop loss above the highs, so at least I have no cost, or at least if we go to a 4-hour chart and we see the recovery, at least trailing my stop loss above yesterday highs. Okay, for the whole position. So I'm not sure what I'm going to do, but I don't see the acceleration I would like. So that points to a higher probability of this just being a consolidation and a soft move lower. So I'm not going to let this go against me. I mean, I'm in profit. I want to book some. So I'm going to see which of the two methods I'm going to follow. But probably today I'm doing something about it. I'm still waiting because the yen does not seem to want to weaken. So obviously I'm not going to take profits. I might trade my stop loss, but I'm not going to take profits while it still shows some downside potential. The pair I'm in. But I'm really closely monitoring it day by day. Let's see what happens at the end of, how it closes today. If it closes, for example, as a Marubozu closing black, as it would be now, which means that the price will close at the lows of the day, that's obviously a bearish signal. So in this case, I'm not going to book anything. But if I see an attempt for a recovery, etc., a reversal of the USD yen from the zone we talked about, then I'm definitely booking some. Okay, so as you understand, once again, I'm very cautious with the yen pairs. I'm not convinced yet that these moves are more than corrective. Okay, I need to see more to be convinced. People asking about the USD CAD again. Obviously, I cannot tell you to be short. I told you many times in the past. I can tell you that I'm expecting a rebound soon, very soon, because this is already a mature wave 3 of 3. But I'm going to repeat what I said. I think that the first rebound higher you're going to see is going to be a bull trap because it's going to be the 4th of 3rd. So do not try, in my opinion, to buy a recovery. Try to find a place to sell it if you want for another leg lower. Okay, so if you're asking because you really want to be long the USD CAD, in my opinion, we're far away from that point. Okay, the USD NOK tells you the same story as you see. The same story. Okay, I'm still short, of course. I mean, as I said, the USD CAD was an amazing guide for the USD NOK. It did everything sooner. So, by monitoring the USD CAD, you knew what was coming for the USD NOK. I mean,
so you should get, so the CAD should turn first.
Yes.
To correct, right?
Yes, most probably, okay. Yes. If it keeps following this lead that it has, yes, it should turn first.
So CAD leads and NOK follows.
At least, in this whole move, yes, it has been clearly leading the NOK. Clearly. I got convinced when I saw the rejection from here, actually. That was the point I was convinced that it's leading. And that's why I was so confident, if you remember here on the webinar 2 days ago, 3-4 days ago, actually, I had said that I have a target to book some profits between here, and we were actually testing this exact zone during the webinar, and I said, listen, I'm not even taking partial profits, because looking at the USD CAD and being now convinced that this thing is following, I'm pretty sure that it's going to accelerate even further, and that's what it's doing, actually. So, I'll keep following CAD as a leading currency for the NOK. And as long as this correlation, this delayed correlation does not break, I'm going to stick with NOK as it is. Although I have to tell you that I'm looking this zone for a probable recovery. For me, any reversal candle at 8, I remind you that 8 is a seriously critical level. Look at this, right? So honestly speaking, I don't think I'm going to keep myself from booking some at 8, because 8 has been attempted as a breakout level plenty of times since July 2015. So during the past 2 years, we've tested it a lot of times. Sometimes we've penetrated through it like for half a day, for 1 day, and all of them, even those breaks, were false breaks. So I'm not going to push my luck, I've been short from up there. Come on, I'm definitely booking some, but I'm not going to book them all, because I do expect a new low afterwards. So, if you've missed the party in those currencies, don't try to chase. But on the other hand, I'm warning you again, there is a chance that the first reaction higher you're going to see is going to be a bull trap. So keep that in mind as well.
Any other questions for Steve that he hasn't
USD
covered?
CAD turn could be the first sign of a mature USD rally back to 97. Yes, I would agree with you. Can you look at the USD MXN? Yes, I can look at the USD MXN. I'm actually looking at it like at least once per day, because I want to see what happens from here. We're retesting.
Yeah, we're trying to throw under.
Yes. So there's not much I can tell you about it at the moment. I can tell you that obviously you don't want to be long unless you see some attempt of a recovery or some strong candle.
How about a 4-hour?
No. I personally I don't trade on 4-hour charts.
Oh, okay. How about a 1 hour?
A 15-minute one, yes. The first time you see.
How about a tick chart?
A tick chart, yes. I actually used to know a guy that was trading off tick charts, and there was like, I was seeing at his screen and I was getting a headache. I was like, dude, honestly, what the hell? I don't even know what's happening in the pair when you're looking at the screen.
His broker loved him.
His broker
Lots of volume.
Must be like,
Yeah,
brokers would like to have only those kind of clients only.
Steve, look at this 5-second diversion.
Yes, it's an amazing 5-second diversion.
All right.
Euro USD. We had two scenarios for Euro USD. Either a rejection from here, which we got, but it was a 2-day rejection, so or a penetration, and then looking again at this level as a support. Obviously, if you zoom out in the chart, we had a previous high at 116.16. So this is an obvious resistance target. On the other hand, 114.60, 70, 80, even the bottom 140.40 of this zone, it's support. Unless you see some big reversal, and a break below here, there is nothing that can make you take a trade here. Let me explain what I mean. If you're not involved yet, would you go long at current prices? No, it wouldn't make sense. If you're not a scalper, it wouldn't make sense. Would you be short? No, it wouldn't make sense again. So, if you weren't involved from lower prices, this is one of the situations that you have to persuade yourself that, okay, this is a pair that I should be monitoring and wait for an actual opportunity. Don't just monitoring and hoping that, by looking at the chart for too long, you're going to really get an opportunity jumping out of the chart and knocking on your door, because I think we're not there. We're not there. So honestly, of course, I'm monitoring Euro USD like constantly. It's on my charts constantly. But I'm pretty sure that I'm far away from trading it again. I mean, from seeing it giving me a good risk reward to say, okay, now I want to do that with it. You know what I mean?
Steve, you're getting a question kind of about your trading style. I know it, but I want to let you answer it. It's from Diego Katzman, Cirque. I've known him for a while. Very good trader, trades for fun.
Just tell it to me, because I'm not seeing it at the moment.
Oh, what do you use for triggers? Then, Steve, what about stop size?
Okay, what do I use for triggers? The answer is very simple. Confluences. I do not take trades if I don't have confluences of multiple of things telling me that something is going to do something. So for me, confluence is, simply speaking, is confirmation, right? I mean, let's say that you are you're a tourist and you're in the middle of Athens that you've never been, and you ask somebody, how do I go to Acropolis? And he says you that way. Okay. Personally, I'm a skeptical person. You might be like, okay, the person obviously didn't want to fool me, let's say, although that's always a possibility as well. And the same thing can happen with one indication. It can be trying to fool you. But on the other hand, they might just be mistaken. I mean, how many times have you seen people giving the wrong directions on the street unintentionally? So what I always do when I'm asking for direction is like asking a second person. Like, how can I go to Acropolis? If the second person points you to the same direction, obviously now your chances of going to the wrong direction trying to find Acropolis are very, very low. If you ask for a third one after you walk a little bit longer, and they point you more specifically, then you're even more certain, you know what I mean? The same thing happens with confluences. It's like looking for a direction. The more people point you the same direction, or the more indications point you to the same direction of a financial instrument doing something, the higher the chance that that financial instrument is going to do that thing. So that's what I'm looking at. And what I'm looking about stop losses, obviously, for them to be small in comparison with the profit I'm looking for. So obviously the reward to risk ratio to be good. And but on the other hand, in many cases, if it's a longer term trade, for them to be at some distance, so I don't get knocked out just because of some stupid overnight move, which I'm pretty sure that we've all experienced that. I hope that covered your question. Andrew says, when you ask the third person where the Acropolis is, he tells you, look up, dummy. Yeah, most probably you will be able to see it. Correct. EuroNOK and EuroCAD, I have questions. Yeah, no, I didn't cover them. But honestly, nothing much has changed because, they've given me, no reason to not be short yet. EuroNOK, on the other hand, is just lovely. This is obviously a third wave of some kind. I mean, look at it. How many consecutive down days is that? 2, 3, 4, 5, 6, 7, 8, 9. Okay, and that brings me to NASDAQ. Blake mentioned it briefly. That brings me to NASDAQ. How the hell will EuroNOK bring me to NASDAQ? I'll explain. 9 consecutive days down in the EuroNOK tells me that I'm seeing the kind of move I was looking to see. The question is, because we had that conversation with a friend that was here, is the following. What do 8 consecutive up days in the NASDAQ tell you, and 9 of them out of the last 10 days? Let me take it oppositely. If we go back in the chart, how many of those can you find in a move lower? So, where is the trend? I mean, we already said where the trend is when we saw an ABC, right? We saw an A, B, C. And to be honest, I was waiting for a little correction before moving higher. But this thing is a beast.
What if you get a pullback now that it's made new highs? Would you still like it?
Oh, yes. Undeniably.
Okay. All right.
Undeniable. I know everybody's going to be, oh, that was a false break, etc. Yeah. Okay, sell the false break. Sell the false break. But if I had to do something about it, which I'm not because I've said I cannot go so against my fundamental bias. At some point, I'm going to be short, and I'm going to be short, seriously short the indices. Okay. But if you told me that, listen, you have to trade the Nasdaq, end of story. That's it. Your commitment is that you're going to trade the Nasdaq. What would I do? I would buy with my eyes closed any dip to 57, 67, or a retest of this channel. Honestly. Okay, so yeah, at some point it's going to move lower. I mean, 9 out of the last 10 days are up days. If we get another one today, that's going to be the 10th. Okay, out of the last 11 and the 9th consecutive. Obviously, it's going to pull back at some point. But I'm asking again, show me a place that it actually dumped for 9 consecutive days. It remains bullish. That's it.
From August 21st into October 10th.
When? Which year?
Coming up.
Petr Benson. Yes.
I talk to Nostradamus every once in a while. So that's what he's thinking, Nostradamus.
Okay. So the cable. I have a question for the cable. I'm going to give you the same answer I gave yesterday when I was asked. What would I do here with the cable? First of all, which was our friend that indicated the cup and handle formation?
Ronit.
Yes. He's right. This is a cup and handle formation. This is a bullish continuation formation. 1. 2. The cable hasn't even breached the first support we found. Where is the first support zone? This, 130. Okay. So, especially as long as it holds 130, there is no conversation to be made about cable. It's bullish, end of story. I don't care. It might plunge from here and go a billion pips lower. But being currently at this given point in time and not even having breached a single support zone, if I tell you anything else than the fact that it remains bullish until proven otherwise, I wouldn't be knowing what I'm talking about. So it's bullish until proven otherwise. Even the corrective move lower after this huge candle here shows to be corrective. Why? Because it has already taken us 3 days to just retrace around 50% of what the last bullish candle gave us. This is overlapping. This is not bearish. Okay.
Yeah.
So until proven otherwise, this is simply a small consolidation / correction ahead of a next move higher.
Maybe that's how Euro Pound prefers. It's going to be more about cable outperforming to the upside than Euro coming off.
Perhaps. Let's have a look at it since you mentioned it. Okay. Obviously, we had a recovery. Obviously, we stayed at the closing basis below this zone, and that keeps me believing that the bearish scenario is still valid. Obviously, looking for reversals, as I even wrote specifically on the blog post, is a low probability, high reward game. So don't be fooled. Even if you manage to catch reversals like 35% of the times, if you actually have played your cards right and you follow your reward to risk ratio, you're still going to be profitable. Because the benefit of catching reversals is that you get extremely appealing reward to risk ratios, which means that you can make multiple times your risk, which means the money it costs you to be stopped out other times you tried reversal, just by one profitable trade. Okay, so as I said and wrote in the article as well, when you're trying to catch reversals because you have confluences, you should still expect your ratio to be below 50%. But that should not be a problem as long as you're not, and this is my big, what I'm going to say here, I'm making a parenthesis, is my big objection to the phrase that says, nobody go broke taking profits. That's actually not true. Because if you're looking for reversals, and you're taking profits when the move on your side has been, just as long as big as your stop loss was, it means that you're trying, for example, to catch reversals with a hit ratio of above 50%. So in this case, by taking early profits, you're going to go broke. On the other hand, if you are a trend follower, so you're taking trades in the direction of the trend, then yes, even taking early profits, since by following a trend, your hit ratio should be high, could be 60% if you know what you're doing, could be 70% if you know what you're doing, as long as you're following a trend, then yes, you cannot go broke by taking losses. But even the adage, you cannot go broke taking losses, is related to what kind of trading you're doing. Okay, so that's something I wanted to mention.
Thank you, Steve. Great wrap up.
Okay, the rest of the questions, whatever we didn't manage to cover today, of course, we're going to cover tomorrow. Thank you for your time, Dale. Who do we have for an interview today?
We have Bryn Kelly, @Bryn Kelly, and Bryn is an oil analyst. She's not technical, she's fundamental.
Oh, that's going to be interesting, actually.
It's going to be very interesting to know what keys that Bryn looks for.
Perfect.
And making decisions for directionally in the oil complex. So,
Perfect.
Bryn, welcome to FACE.
Enjoy the interview.
Thank you. Welcome to FACE, and I'm passing you the presenter ball. So, looking forward to hearing your voice. Oh, and you even have a screen for us, Bryn.
I do.
Oh, fantastic, because I wasn't sure. We didn't talk about that. So everyone, this is Bryn Kelly. You could follow her @Bryn Kelly. And Bryn, thank you so much for taking time out of your day. We're going to get you out of here before the oil report. I know that's big for you in about a half an hour. But I'd still like you to get into a time machine with me. I read about all the different brokerage firms, commodity firms you were with during your career. Can you take us back to what it was like, how you got involved in the business? Who were your influences or books or mentors that you had developing into what you are today as an oil analyst?
Sure. Well, first of all, thanks for having me. I have been a career trader. I came into it a little bit non-traditionally. I started out of college with a finance degree and started working at Cargill in the mid-office. And really that's kind of where my love for the trading business came from.
Where was Cargill? Where was it in Chicago?
Minneapolis.
Oh, Minneapolis, okay.
Yeah, the headquarters. Yep.
Okay.
Yep,
okay.
So I was young, right out of college. I didn't know anything about trading. My father was a CPA, so that was really the extent of really what I knew.
He must have been very glad about your decision to get into the commodity business.
Not really. He really was more interested in me coming into his business.
I know. You know what my mom said to me when I went to the Merck and I was a runner, out trade clerk, and then Series 3 guy? Honey, please find a real job. Yeah, I mean,
it certainly was, like I said, it was a big corporation with, a particular career path. And like I said, I didn't start in trading. My first job at Cargill, I just happened to be placed in the trading business. You generally got placements after you went through some training. And I ended up getting placed in what was called then their financial markets division. And so that's when I really fell in love with it. And
how fortunate, Bryn, how fortunate of you to start that way compared to what people, the big clearing firm jobs in-house, they're just not there anymore for young people coming into the business. They get bamboozled on the internet and social media. So I'm sure you appreciate how fortunate you were to break the ice with a very influential, high-end commodity firm like Cargill and getting placed in trading. So fantastic.
Yeah, I mean,
for
it
you.
wasn't, I wasn't, it wasn't commodity group, it was a financial group, and they traded baskets of stock. And it took me about 6 or 7 years to ultimately get my first trading job. People probably have experienced that there isn't a lot of movement from the mid office to the front office. So I ended up moving around and trying to position myself at various firms, and I ended up in the early 90s as the controller at Coke Supply and Trading in Wichita, Kansas. So I was at their headquarters.
Okay.
And
So
then
you were handling hedging for them. They were a commercial commodity firm.
well, I was the controller, so for the supply and trading group. So again, I still was not trading.
Okay.
I was, responsible for all of the financial reporting and whatnot, and staff and everything that goes along with running a business. Still trying to get myself onto the trading side, and finally my break happened. I was talking with a firm in Kansas City right when the electricity markets were deregulating.
Oh, Enron days.
Pardon me?
Enron days.
Correct.
Okay.
And so there was a utility in Kansas City, not Kansas City Power and Light. It was called Utilicorp, and they were starting up an unregulated electricity trading group. They already had a gas trading business, and so they were adding to it. And so I was one of the first 3 or 4 traders that they brought in. And that's when I really got my lucky break. The head of this new business basically gave me a shot. And he gave me that shot because of all of the background that I had within the trading business for all those years. It wasn't really a traditional move to go from being a controller of a firm to being part of a merchant energy group. And I really think that's the big differentiator is in deciding about trading jobs, is taking a look at the merchant side of the business, because that's really where you can form a career and get enough knowledge about the commodity you're working with that will have incredible value for you in the future.
For the rest of your trading life.
Correct. Right.
Okay.
Moving the logistics of the business, moving around. And so from then on, I spent my career in merchant trading firms like BP, Sempra, Aquila, trading electricity, natural gas. And then I was at a hedge fund in New York called Millennium, where I traded electricity, natural gas, and crude oil. So
Wow.
It's been very, very good fundamental experience to have. And within a merchant business, what you're really focused on is the logistical opportunities that the futures prices present to you.
So like arbitrage opportunities between cash and futures? Spreading opportunities?
There's not really an ARB between, there's an ARB based on location around the country, right? So WTI is just one price, like crude oil. WTI crude oil is just the price of crude oil at Cushing, Oklahoma.
Okay.
And then there are hundreds of other products and futures and over-the-counter swaps that trade all sorts of various locations, right? Crude oil in Houston, crude oil on a barge, crude oil, there's logistics. And essentially you're looking at the spreads between the various markets and employing your logistical capabilities, whether you own pipeline space or you have the ability to buy pipeline space or you can charter a ship and whatnot. and you're taking advantage of quality spreads and location spreads.
Did you ever handle a hedge account for the Clampets in Beverly Hills?
I never managed outside money. I always traded money for the firm. So for example, when I was at BP, right, you're a merchant trader for BP.
Right.
So
I was
they're
talking
not
about
outside investors.
Yeah, it was just a joke that you're so much younger than me. You're so much younger than me.
I don't know that. I don't
remember the Beverly Hillbillies, you know, they struck Jethro and his family struck oil in Beverly Hills.
Okay. Well, I remember. Yeah, that might be just a few years before me, but not very many years.
I told you we'd have fun. So, okay, so here we have the WTI curve shape. So explain to us what you're seeing here with your dotted lines, green and white.
Sure. Well, I mean, there's a couple things going on in the crude markets. And I guess I want to first start out by saying that my trading style, it seems to be a lot different than, what I see from the typical conversations out there. And it has to do with my experience and where I'm comfortable. So these are the types of things that I look at, and the type of trading I do is rarely technical, and it is not a statement against technicals. I appreciate them, I look at them. That's just not where I get my confidence from when I set up a trade. I'm much more interested in how all the pieces fit together, and I might only take a trade in a particular location or commodity once a month, once a quarter, or every day. It really just depends. I'm looking more for playing out a longer term scenario. So.
Okay. Well, Jack Schwager said, I've interviewed him a few times, and I asked him, what's the most important thing for a trader? And he said, find a trading style that suits their personality.
Exactly. Right. Because the most important thing is that you have conviction.
Yes.
And I don't have conviction trading against computers. That's just not my thing. My belief is that I can't buy enough advantage to go against all of the programmatic algorithms that are out there that have co-location and high speed and a group of people, PhDs and psychologists and applied mathematics looking at behaviors. That's not where I want to compete, because number one, that's like going to Vegas. I mean, I don't have any odds on that.
Let me ask you this, Bryn. Do you think it's more difficult to compete against algos than it was from locals in open outcry?
Yes.
Okay, great. I value your view on that, because I tend to agree. So,
well, I mean, because of course locals, I mean, that just was not, unless you were there.
Yeah.
Let's just say there's many more people to trade against than there was. I mean, you could take the example of the local group, right? It was a fixed group.
Yeah.
Of people.
How many? Like 50 guys in the oil pit at NYMEX.
Correct.
Okay.
So that now it could be 50 million. I mean, you don't. You just don't know who and what is out there and how. I mean, I think of it like advertising, how kind of twisted it is in the types of things they know that resonate with people.
Oh, subliminal stuff. Like
pumping in cents into a grocery store, all those things, right? I mean, that's not where I'm at. So that's number one. I just wanted to get that out there, because I think it seems like a lot more people are interested and have many more talents than I do in that. So So what I look at, and I have this particular chart up here.
We do.
So I kind of start in one place and dive down. So quite obviously there's the benchmark crude contracts that trade, and there are three. There's WTI, which is US, there's Brent,
Right.
which is sort of covers Europe and whatnot, and then there is the Dubai or Oman contract, which is Middle East.
Okay.
And those are the three main crude oil strips and futures contracts that trade, and everything else, most other crudes are priced as a spread to these contracts because there are thousands of grades of crude oil that are trading out there. So I'll start with, I mean, I live in the US, so I generally start with WTI. And, you know, time is a nice thing, right? So if you go back and you look at charts over time, I have obviously since April, and I'm kind of taking a look at what the 12-month strip has looked like since the beginning of April. And the reason I chose April, and I do for a lot of things, that there's a seasonality to all commodities.
Okay.
Some have more, some have less. And crude oil itself isn't necessarily a seasonal commodity. However, its end use products are. And I consider summer to be gasoline and winter to be distillates and heating oil.
Yes.
So
got you.
and therefore the inventory, you know, numbers and trends that you like to see are related to those seasons. And I'll show that in a second. But just to get oriented, right, you can see that at the beginning of the kind of the season or in April, you know, the curve was pretty flat. We even got to a little bit, maybe even backwardation further out in the curve, but it was pretty flat. And flat curves can tend to rise and fall together.
Yeah, there's no message like there is in a carrying charge market or backwardation. Right. There you have a message of near-term demand or just carrying charges, normal carrying charge market.
Sure, and this was the market, you know, sitting before the season had really started and had been absorbing the OPEC cuts that had started at the beginning of January. Right. So it was still a little bit in a wait and see mode. And then the first inventory numbers started to come in. I mean, it's not like we don't have them every week, right? But they start coming in for the beginning of the driving season, and the whole market just got nervous. And really, as happens in most commodities, you see this in natural gas as well. You get like one day into the summer season or the winter season, and if you don't get the most bullish number, you know, the market just throws in the towel. So at the beginning of the season, we saw people were waiting for gasoline inventories to draw down.
Right.
And they weren't.
Yeah.
So it just fueled the bearish sentiment and the oversupply and the glut sentiment that's out there, and which continued, you know, into June. Although then we see a little bit of curve shape start to take hold, and now it kind of brings us through to today, right? And we can see that we've taken all of the backwardation out of the market, and we have a whole bunch of carry. Now, if you look at this chart right here, is basically showing what the 1 month carry was.
Okay.
So each month is just Augie, Sep, Sep, Oc, Novi, right? It's just each 1 month roll. And at the beginning of the year, you could see that once you kind of got a few months out, the market was 1 month, it had gone into backwardation. And it was a very slight contango. And then you kind of get us to where we are today, right? And the entire curve all the way out for 12 months plus is in carry. So the effect of that was, if you're, when you're producing, you have a choice, right? You either put it in the ground or you sell it into the market. And once like a 6 cent, even these carries are a little bit more, 21 cents and 17 cents. But in reality, it does cost about 15 to 20 cents to carry a barrel from a month, from one to the next. And then you have some added costs and some risks. So when the carry gets, narrower like this, really you can expect more barrels to just be sold onto the market. And that's what we see here in this curve, right? There was really not a lot of incentive to hold the barrels, which just weighed the whole front of it down. Because you can see here, the back now is starting to hold on.
I see that. Okay. So during these different phases, you're making decisions on directionals, or just taking advantage of something like knowing how the curve is going to go, and that implies what price might do?
Yeah, so I will trade spreads, so calendar spreads, right? Based on this signal right here, right? I would have been a little more interested in trading the front versus some of this back. A popular spread is the DEES spread, right? The front December versus the back December. It had almost gone into backwardation earlier in the year. And that was certainly the narrative around OPEC cuts aren't going to carry through beyond the middle of next year.
I see.
So the market will get tight and then it will loosen up.
Okay, so more constructive. So you'd be long front month D's, short 1 year out D's.
The other way around. Short the front month.
I see. Okay. And
relative to the back.
Okay.
And only because, we, based on inventory levels, I believed that the shape of the curve was actually going to get a lot more, it was going to come under a lot more pressure in the front, because there was not a lot of carry. The market was going to be selling out barrels into the front of the curve, but prices at 40 some dollars in the very back, 45, that doesn't bring a huge call to action, right? Above $50, you could expect producer type selling. And that's kind of where we were in the curve here. But once you get down to $46, $47, $45, not as many people are dying to lock in a sale there. They'd be more interested in maybe buying some puts.
Interesting. So I saw a tweet by you, Bryn, and it had euro with exclamation points. Do currency movements play a role in your decision-making process? Weak dollar, strong dollar?
Not usually. However, there are periods of time. I remember, was it 2007, 8, or 9?
Yes.
The euro was falling, correct? Or was it, whichever way it was going, crude oil was the complete inverse. And right. Of course, when we hit, I can't believe I can't remember which way.
It was a strong dollar that took gold down from its peak of 140.
Right. Yeah. So a strong dollar makes it difficult for everybody outside of the US to purchase crude oil, right? Because they need to buy it in dollars.
Right. Do you see any potential correlation since the dollar is a petrol currency? Like right now, crude's bounced, but in generally, we've had a weak dollar, and besides this recent bounce, generally a weak market. Could less demand for crude equal less demand for dollars?
I wouldn't say it that way, but I will say if it reaches extremes, because I think during the time period, the 2008, let's just call it, I think it was 85 cents or something, that or below $1, right? That the euro got to, and that was an extreme, right? And so that's why it was so correlated.
Right.
So I would say that if the euro,
only when the rubber band is stretched in a big way.
I mean, because for the most part, I mean, I know people get excited about, and there are interesting moves that, you know, the dollar, euro, and other currencies have had. They're not really outside of any ranges that we've seen.
Yeah, all correlations have been breaking down all over the board recently. Let me ask you this, being an energy trader and having been around for a while, you keep one eye on geo risk, and I know there's some people that are, you know, it's a forecast, and they think that there might be some type of problem in the Strait of Hormuz. How much risk premium would be put into oil if there was a problem in a skirmish with Iran, do you think?
You know, that I would, geez, how do I answer that? If that happens, that happens. I don't believe there's really anything priced in to this market. If anything, I think there's probably a huge bear discount priced into the market. You know, there are a lot of the logistics of the crude market have gotten to a point where you know, we have a lot of cushion. And let's see let me make that example a little bit more. So I don't know if you can see right here. One of the things that has happened over the last several years is this first section is the crude oil stock levels. And the second grouping here is the US storage capacity. And most of this is in the US Gulf Coast because that really has become the major hub, right? It's where over 50% of the refineries are. You know, we now need to make space for exports, and you need additional capacity for that in order to have crude coming in and going out. You have to have different tanks and different pipes. And so over the last several years, yes, we have added to crude oil inventories, and you can see how our stocks have grown. But we have also significantly increased our storage capacity. So it would be to think that we would add extra capacity and just leave it empty. You know, that wouldn't be very optimal, right? It would make that capacity pretty expensive.
Build it and the oil will come.
Right. And so to look back at, you know, I see people do a lot of comparisons to 5-year inventory levels, and they might, you know, just take a look at, you know, look 2012 and look how high we are now. You know, at some level, the system has expanded. We've added pipelines. Pipelines need to be filled, you know, and that crude goes away forever, right? Because it's in the pipeline. We add tanker capacity in the Gulf Coast. We've added a lot of capacity that's working. And this is considered working storage capacity. So we're now just at a new level. And I don't know that I would say the new level equals bearish more than I would say the new level equals lower volatility.
Interesting. Okay.
But the lower volatility is for crude oil, right? I mean, a barrel is much easier to get at if it's pumped out of the ground and sitting in a tank. You can get to it much quicker than if you have to go rush and pump it out, right, for some sort of emergency.
Right.
It looks like we just had the crude number there.
Okay.
So anyway, so I look at it as these upside scenarios, such as Iran or whatever you're talking about. We've reduced the volatility on those events because we have.
Even if we liquidate the strategic SPR, it's really not good. What is that? Just a token gesture, or what do you think is behind it? We don't need it. Same philosophy.
So from what I've looked at from the sales out of the SPR, they have been primarily sour crude, which would make sense because the OPEC cuts were primarily medium sour crudes.
I see.
So, and refiners in the Gulf Coast are geared towards running medium and sour crudes. So I'm not sure so much, I think it was a smart thing to do, right? I mean, might as well take advantage of this tightness in these more heavier and more sour crudes while, the market is a little bit more tight of them.
Okay, well, must have gotten a constructive number. I see crude firming up. Any view that this range is $20 range or $15 range we've been in? It feels like for years. I know it's only been about 8 months. You have any biases, or that's not your game?
Okay, so what I would say on that is I see us being stuck in this range for quite a while.
Okay, like the bonds.
And I'm not that interested in catching crude from like 46 to 47, right? Or 47 to 48. I would be a little more biased to an upside picture, but I don't mean, let's say holding even. But really for me, I don't really care if it's 44 or 48. I'm not really, I don't get that much bearish, beyond that. Because if you take a look at, and there may be new evidence that changes my opinion, and that is certainly
always.
what I'm.
It's a process. Yeah, you're always reassessing.
Yeah, well, because we have drawn, so this chart right here is since April, as we were talking about April. Right. In the past several years, here's how much we've taken out, or the inventories have changed. And so far this year, and I don't have today's number added in, so we've taken around 53 million barrels. And you can see that, I mean, we're not even close. We're far above anywhere last year.
Right.
You sort of expect that we would build heating oil inventories because that's what you do in the summer. You build heating oil for the winter. And you would sort of expect that you would, draw down some gasoline, although, that's what they're mainly producing.
Yes.
So from this picture here, unless if this were to continue, at this rate for the end of the year, I mean, the picture gets a bit less, bearish. This glut narrative, really, it's not real, it's perceived. I mean, it's real that we have more in the ground, but a glut would imply a massive contango.
And lots of oil sitting out on tankers that there's no storage for.
I mean, you'd start to see cash discounts to the screen, of just, dollars, if really there was no takers in the spot market.
What a great perspective.
Then you'd see a glut, but just this general conversation of inventory levels being high, I need to see some new evidence, and the new evidence would, maybe mean that this inventory picture starts to look different. I mean, just even prior to this week, again, I haven't typed the number in yet, but we have drawn inventories down now to below last year's levels, slightly, in most cases. So now let's see. We have never gotten to the dire scenario that really was initially proposed, that we would run out of storage.
Yeah, because there were all kinds of stories about oil tankers not having a home for the crude. They were just sitting out there in the sea or in port and couldn't unload it. So,
and I mean, that may be true. That may be true, but we didn't see a lot of fire sales because basically the entire curve moved down to meet that.
Okay.
So anyway, I go into so many different aspects of this in order to put my story together. And currently what I'm seeing, especially, I'm sure lots of people have looked at what's going on in gasoline this week. Now that would be an example of an actual real shortage versus perceived. And meaning that there is some issues with refineries on the East Coast. And you've seen the front month RBOB crack. I think it's like almost $21. It's just gone nothing but straight up. And you can see that even here just in the last few days, right? Just the front of this RBOB curve moving up.
Yeah.
And that's really, yes, we have oil ready to go. We have it sitting in tanks and we can process it. What we don't have is gasoline and heating oil, sitting there ready to go in the same manner, right? So if what you look to see is that these products start to lead the whole market higher.
How about oil shares? Like I've noticed a relationship between miners and precious metals. Is there a relationship between the shares and the underlying commodity where the shares, after you could get an idea based upon share strength or weakness, what's going to happen to the price of energy?
Well, I think you're talking about equities. Is that what you mean?
Yeah. Yes.
I mean, there is a general case to be made for watch what refiners do versus producers.
Okay.
And if crack spreads get wider, right, and they get more supportive, I mean, I think now the front month RBOB crack might be at the highs of the year.
Right. You buy the refiners then.
I mean, I'm not making that recommendation.
I know, but that's what it would imply.
Correct.
That they'd outperform. Okay.
Correct. Yeah, and really, I think, is this product spread scenario that's happening right now a one-off based on individual outages and issues, or are we actually hitting a little bit more of a trend, right? I mean, we've drawn down some inventories. We only have a fixed amount of refining capacity. I mean, that story is the same. But if you start to see that play out, I mean, typically the gasoline spreads start to dwindle a little here as we get, beyond the August contract. And then the heating oil cracks start to pick up, right? Because then you start thinking about winter. And really at the moment, they're both fairly strong. And that's not one for one price correlated with crude oil, but it is a leader and is something to watch. And certainly if those collapse next week, then back to the drawing board.
Okay, I just have a couple of questions from the community. One is, Bryn, do you see sub $40 WTI?
I mean, let's say if I don't look at it in a bubble. So that would mean gasoline would be what, like $1.25 or something.
Yeah.
I guess I can't get that bearish on gasoline, which is why I'm not that bearish on crude oil.
Okay, and there's one more macro. As renewables and electric cars become more mainstream, will the price of oil become more stable or more volatile, in your opinion?
Well, that has a long lead time to it, and I would say there's a future state where if we have kind of disincented producers of gasoline, right, for cars, you might have a volatile scenario because you have less producers for those who still need gasoline, but we're talking way out in the future. In the short term, you know, it's not something I worry about.
You don't think about it, yeah.
I'm not, I know it's there. I know it's happening. I feel like I haven't seen anything that's changing overnight.
Yes. It happens stealthily over decades, if it happens.
Well, yeah, I mean, the electric utilities are a whole, I mean, I don't believe everybody will want to be dependent on electric utilities for their fuel source.
So buy solar?
Well, I mean, don't buy solar from a utility, right?
Yeah,
I mean, you do solar off grid, great, but I liken solar panels today to like the first calculator, like the first IBM computer calculator in a big, massive room. Like, I'm not putting that on my roof. Like, I'm gonna wait till it's, you know, like
miniaturized.
Right, when it's just the little one that's at the end of a pen. That's when I want it. I don't want my whole roof, you know, stuck with the first ever computer.
Bryn, what a great job you did today. Was I right? Did you enjoy yourself here? Because the community has learned a lot about the fundamentals of oil trading from you, and I want to thank you for edifying our community and, you know, taking the step to go live. You're a natural, and may I from now on call you my trading warrior sister.
For sure.
And really hope that you have continued success throughout the end of the year, and perhaps we do this again sometime down the road.
Definitely. I enjoyed it, and you know, I always it takes me a little bit longer to get to the point because I always feel like I'm doing a backstory, so you know, maybe next time I'll get to
it was fine. Everyone, and you don't have any kind of business model. You just, you know, where you teach people, or do you sell research or anything like that, Bryn?
So I publish fairly weekly fundamental analysis through the label, The Fundamental Angle, and it's published at Martin Chronicle. And so people can go sign up and receive all of that, or they can go to thefundamentalangle.com. I just put out a big report decomposing or analyzing the Mexico oil deal. So if anybody wants to go take a look at that, you can get it through LinkedIn. And the Twitter handle is actually Bryn K. Kelly.
Bryn K. Kelly. Okay. Yep. All right. Well, everyone, I think that's going to be a great report to read, especially for you peso traders. So thanks again, Bryn. Have a great week, and I appreciate your time and your insights and views, and I learned from you today. Thank you.
Excellent. Thanks for having me.
All right, Bryn. That's it for me today, Face. Remember, don't just count your pips, count your blessings. See everyone tomorrow. Adios.